What's good, trading fam? It's Cook Trades here, back with another video. Today we're gonna be discussing a few couple of little basics that think are necessary to know the strategy. One quick introduction for y'all that watching my last video, all the beginners. I hope y'all got everything set up okay. And I'm just gonna show all of y'all that don't know how to change the chart color right quick. This is how you do it. Want to go to settings, and then you want to go to canvas. After you go to canvas, you got all this. See how you got your background. You can change your background color, your grid lines, and then you got your pane separators, all that. So you can go through and know what all these do and what they control. And as far as trading goes, event skills, and then symbols, you go here. And this is where you change your candlestick color. So your candlesticks are the things that I'm about to get into right quick. And also, I mentioned in the last video, candlesticks are the whole lines and the bars you see on the charts. I'm gonna go over what they represent in just a second here. But for all the other ones, change your chart colors or do anything to it. You got your body's the inside. You got the border and the wicks. When after this video, again, all that will be explained. But basically, yeah. So this channel will be more like just a free flow and overview. And I want you guys, yourselves to go in and do all this and experience with it, because that's really the best way of learning trading. No amount of videos can teach you, but you'll learn through trial and error. So yeah. But anyways, do that and boom. So the very basics of trading. These questions should be on your mind. What is trading? How does it flow within the markets? And yeah. So basically, when trading, people are constantly buying and selling to try to gain capital on whatever side they picked, and it's a constant battle and a constant fight. So because of that, you get a picture view of almost how the market is moving, or actually how the market is moving. And in those pictures, you can go to certain websites and look at the candlesticks, and you can then yourself anticipate online instead of going to have to put in the stock itself, or online trading. And they created an online version, and this is what you see here. The charts, all that represent the stock market and how it flows. All the numbers to the T. So I'm just going very quickly and tell you the three components of a candlestick. And I'm not quickly, but I'm going to go in depth about it. But three components of the candlestick and how they move, how they flow. Well, not how they flow, but how they look rather. And this is how they look. So you're either going to have a green candlestick with a green candlestick, which is for buying, and then you have a red candlestick, which is for selling. So in your green candlesticks, those will be green and they're going to the upside, but the red candlesticks are going down and they push price down. These candlesticks make a representation of how the market is moving, and allows us to, and then in return, come up with patterns and strategies to try to get an edge on the market and play in the same participation as all the big people are in the market. Otherwise known as retail traders, people that are trading for institutions and trading for themselves, it's retail traders. We are retail traders. We are beginner traders. We just, and yeah. So anyways, you have your red, you're selling. Green, you're buying. These are the bodies of the candlestick. And then normally most candlesticks have, or actually all candlesticks have then wicks on them. So when you see these wicks, these are representations of like how price moves through the history of the timer. Every candlestick goes off of a timer, whether it be 5 minutes, 1 minute, 2 minute, 3 minute. You can then in return change the timer, and the candlestick moves in a flow. Every candlestick's in sync. So think of as candles as time. So timing is everything. Timing is everything in trading. So you can have 5 candlesticks, and then if you have 5 candlesticks, you can then do 60, which is 5 minutes, or 60 minutes, which is an hour. You have an hourly candlestick, and then so it'll be 60 divided by 5. And there's 12 5-minute candlesticks in a 60-minute candlestick. You see how the price breaks it down. You then have 5 minute and so on. So after that, when you finally realize time and candlesticks are then intertwined with each other, it becomes a lot easier to read price action and just go over it. So I'm gonna then show you actually a real example of how they would look on the charts, and let's clear all this out. Boom. Let's see. Let's go here. Go down, zoom in. Boom. You see how candlestick, this is one candlestick, this is one candlestick. This is when all these are candlesticks. And over time, they make a bigger picture showing the overall drop or rise of price. As you can see, these are bounces in between these levels right here. These are the numbers on the side. That's showing what price is currently being traded at, and it can slip down between the time. That's why I say time and price is very important. This is your x-axis, your y-axis. I think of it almost as like a graph. X and y-axis. Do those, you get the solution. The charts are the solution. You can't have price movement without time, and you can't have time without price movement. As a trader, I feel like it's important to look at those two things, because at that point, you can then kind of see a pattern and realize what time that pattern happens. So, we'll go out to 60-minute chart right here. And yeah, so this is a great example. This is a buying candlestick right here. See how it's green? We're buying. This is a selling candlestick. See how it's red? Now, I'm going to go a little bit in depth with this and tell you the actual structure of these. So remember how I said candlesticks move on time, right? So if it's a red candlestick, you have your opening price at which the candlestick started at right here. So that's the highest point the candlestick, that's the highest opening price it's ever had. But then this is your open price it started at. And then this will be right here. This will be your closing price where it ended at. Closing price, the lowest it's ever gotten. Closing price ended. Now to the green candlesticks. Green, as you can see, we were here. We started here. Price came all the way down. And then that's the lowest price it's ever gotten. Like once again, highest price right here. And then we have the open, and then the close. See how it's reversed. So if you're buying, you want to open down here, close down here. If you're selling, you want to open down here, close down here. Always inverse. Okay, boom. So now, everything's built on layers in trading. Pause if you need to. Look at some examples of what I just said if you need to. Just know that that's what those candlesticks do. So, after that, you can then even bring that in more depth. So, you see how the candlesticks have certain length of colors and certain length of, how big the bodies are? So, if that's the case, if there is a bigger candlestick, wouldn't you have to be more selling and more buying? You see how it kind of lines up? So, with that being said, you got to look at these candlesticks and wonder and see how many buyers and sellers there are within these candlesticks. If they finish all flat like this right here, or this right here, that doesn't mean that there's not a lot of buyers. That just means that they're in a war with each other. It can be a high volume candlestick, or it could be a low volume candlestick, and then it comes off and finishes up its decision. But either way, it's all it's saying is the buyers and sellers are leveled off. But then in return, you can also say there are not a lot of sellers, but you can't say there are not a lot of traders in that one time. Because then leads me to my next subject, volume. Volume in trading is basically, long story short, how many people are trading at that time. Volume can spike up 1 second due to the red event I said earlier in the previous video, which is news, CPI, PPI. I'll go over that as well in a later video. But those events, like red news events, is why I say always mark them down, always keep tabs of everything. At that point, because of the volume spikes, we have orders. And that's what these candlesticks are. Remember I said the candlesticks represent the live depiction of orders in the market, trying to get a heads on price. So if there are a lot of selling orders, it's going to be red, a huge red candlestick. And then we have something called structure. And structure is this story right here. The story of how these candlesticks move and how they coincide with each other, and how every candlestick is its own different story, but it all ties in together. And when you get that story, that's when you make money. That's when you really want to understand and learn the history behind it. That's when you will actually make bread. Not when you are rushing, when you're trying to beat the process. This is the process. I know people want to make money, but at the end of the day, we got to realize like this is what it comes down to. You just got to be still strong. So that's it for this video. I'm gonna get it y'all on the next one. I like to keep these videos short because I don't want to give y'all too much information. But it's definite that you go over everything I said. Definitely take notes and just look at these for yourself. Your homework tonight is to look at these and see what I'm talking about. Yeah.